Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Thursday, February 1st, 5 o'clock Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in an uptrend. You can see the trend gauge over here. Improvement from the standpoint on yesterday, our short-term trend had a yellow sub arrow as small caps and mid caps broke below the 21-day moving average. Good day today, though. They recouped that level despite some morning weakness with a strong close. So we're back to 4 solid green arrows. Nice comeback today by market leaders and the indexes. All 5 trending above their short-term 21-day moving average, medium-term 50-day moving average, and long-term 200-day moving average. So what happened today? Summarized as a nice rebound from a hawkish Fed day. So the ugly close yesterday after Jerome Powell indicated that a March rate cut was off the table overnight. Markets digested a little bit and had a mild gap up about 0.4%, and then started to sell off shortly after that, but rebounded. There was some morning panic with regional banks. More fallout from the New York Community Bank was down double digits again in the morning, and that trickled through to other banks. But that stopped, and it stopped about the time that some news from the Atlanta Fed came out, raising Q1 estimated GDP from 4.2% to 3%. Kind of interesting from the standpoint that what the market has been needing to cement rate cuts was negative news, but what we got was positive news, and the market responded positively to it as it kicked off pretty much a trend up for the last 5 hours. Nice close on the day, regaining about 2/3 of yesterday's losses. Here are the numbers. Big 7 up 1.5%, same as the RG8. That's our 8 ETF, 8 growth ETF in-house composite. S&P 500 up 1.25%, equal weighted, slightly less than that. NASDAQ 100 up 1.2, equal weighted NASDAQ 100 slightly less than that. Dow up 1%, mid caps up 1.3, Russell 2000 small caps up 1.4, Global 60/40 up a little less than 1%, in-house GROTECTION up 1.7%. Didn't expect this after yesterday's. The headline on the email that went out was, is it time for a correction or to get defensive? And I was leaning that way yesterday. I was leaning that way this morning when we started to reverse, but by the end of the day, recouping most of those losses, very bullish, especially the way leading stocks responded. And now after hours, the market up nicely on strong earnings from primarily from Amazon and from Meta. Meta up double-digit percent, Amazon up about 8%, Apple down slightly, Deckers with a nice reaction. So we're near all-time highs after hours on the S&P 500 and the NASDAQ 100. So looking like a one-day aberration. And I also saw a lot of bearishness on Twitter, and a bunch of strategists with different big firms on Wall Street saying that this was the last straw, this sell-off that we've been expecting. Now it's going to come, and market seeks to fool the masses, and it did it with today's action. So you can see up 1.25% on the S&P 500. Let's go to the 5-minute chart here. Here's the opening. This was the sell-off that concerned me, making lows of the day. But this is about the time, right around noon, was when that Atlanta Fed GDP info came out. We had a pop, then another pop, an attempt at a sell-off, but the morning highs held on the pullback, and then a nice trend up into the close. Just what bulls wanted to see, and confounding the bears again, who were sure they were going to get the honeypot after yesterday. NASDAQ 100, here it is, up 1.2%, and after hours up another 1.2%. Very impressive action. Let's see what the S&P's up after hours. 0.6%, so great stuff there. 492.15, not quite the at the SPY highs. Oh no, that is new highs for the SPY. Was 491, so there you have it after hours, folks. Let's see if this carries overnight and into tomorrow's session. Dow Jones Industrial Average up, but slightly less than the indexes today. New closing high, however, 38 over 38,500. Mid caps. This is what impressed me. Weakness early. Let's look at the 5-minute. Made lower low versus yesterday, but look at the reaction after from about 11:30, 11 o'clock Eastern time into the close. And same thing with IWM. And this corresponded. Let's take a look at KRE, the regional banks. This is the morning panic I was talking about on regional banks, and then it somewhat subsided. They still closed down over 3%, and you can see how ugly this chart looks. NYCB was the offending bank. Say there's never just one cockroach, but down another 11% today, NYCB. But market, the big cap indexes anyway, and trickling through to small caps with the regain of the 21-day moving average, shaking this off for now. Caps just barely up after hours today, as it's the big tech names that are carrying the indexes higher. How about the VIX? VIX pulled back a bit, down 3.3% with the rally in the indexes. How about the dollar? After strength yesterday, pulling back today. Let's take a look at the 5-minute on this. So you can see the big strength into the close, weakness right out of the gate here, and then sideways during the afternoon while the market was going higher. So that's good stuff. A weak dollar helps the domestic stock indexes. And with the fear of the contagion, gold had a good day, up over 1%, although off the highs. GDX also up 4%, closed near the highs. So finally, gold stocks may have stopped going down. How'd Bitcoin do? Down on the day. BITO, I'm showing that down 2039. I'm not sure that that's correct. I'm actually showing Bitcoin up on another quote screen. Either way, not a big move on Bitcoin. Now bonds, here's the thing. Contagion in finance leads money to flow into a safe haven. A safe haven is bonds. Even though Powell indicated that he didn't want to cut rates, what we're seeing is rates coming off with prices going up as money flows into bonds with that NYCB issue. Is that the only issue? I don't know, but money is flowing into bonds. Sometimes, it's human nature to seek an answer for something, although we're trained to just respect price, but sometimes 2 plus 2 does equal 4. And here you see the broad bond index up 1/3%, the long bond even more, up 1.63%. And of course, that means that the 30-year yield coming off quite a bit, down 2.7%, and the 10-year down 2.62%. More good stuff for stocks. That's our inter-asset correlation. Let's get to the tail of the tape. As I already mentioned, Q1 GDP jumped and treated as good news. Day count back to up 1, reclaiming the 8-day exponential moving average on the S&P 500, and certainly after hours on the NASDAQ 100. I think it closed right at it during the regular session. 21-day moving average, 19th day above there on the S&P. As far as individual sectors go, 10 of 11 were up. The only one down was oils. More news today, oils. There was rumors of that Israel had agreed to a ceasefire. Oil came off after that, although it was later challenged whether or not that's the case or not. But regardless, oil did a reversal. Our gain in NRGU turned into a small loss, so we removed that from the portfolio. On the downside, it was just oils, KRE, and KBE, the banks, along with the dollar. So on the portfolio, NXT, we added, this is a solar stock. Solars are the worst performing group. This was an exceptional gap up with volume and strength, and we bought it. We'll take a look at this chart in a minute. On the downside, Affirm, terrible day. Broke the 21, broke the 50. We got stopped, and as I said, trimmed NRGU, so a slight pullback on our adjusted beta from 1.38 to 1.29%. Bottom line on the day, indexes and leaders shake off the hawkish FOMC from Wednesday and are up further after hours on strong tech earnings. Let's get to charts here already showed NYCB. NXT, this is what we bought today. Up on 500% above average volume, up 24% on a day. We're up about 5% on this. We bought it after the initial gap. You can see the 5-minute chart here. After it settled around this level is when we got in the first time, and then added again there, and it closed near the highs of the day. Now, we're always looking for they say to focus on the top 20 groups. What we do is focus on what groups are moving up in the rankings. Groups can get stale if they're in the rankings for too long, and then you start shoveling money into it. So we want to look at what is going up. And right now, one of the lowest rated groups is solar, just terrible relative strength. But if this can get any kind of a boost whatsoever, starting with NXT, and if it trickles through to the rest of the industry, this has a long way to go up. I recall finding Weatherford and TDW had some nice looking charts. While oil charts looked awful, and this was really the case with NXT too. It's about the only solar chart that looked decent. Great reaction to their earnings report. As I said, in another bonus, something that I try to check but don't always remember, NXT has a 29% short interest. When you have heavy shorts and something gaps up like this, the shorts have to cover, and that helps push up the price of the stock higher. Or at least puts a floor under it. And that's what we saw with it closing at the highs today. So a big gap up in a highly shorted stock is often a recipe for some nice returns. Let's take a look at a firm which we got stopped out on, came back a bit, but still closed under the 50-day moving average. So stopped on there within our loss parameters. NRGU recovered a little bit, but like I said, when we went from a +1 R to below flatline, we stopped out on that. Let's look at the rest of the portfolio, and I'm really impressed with the way these things pulled back. And this morning, me and the fellows were going through all of our charts and reinforcing that the leaders were acting extremely well. Very few breaking below our short-term 21-day moving average. That's the green line on here. You really had to look hard to find one. I know Affirm was one, Shop was another one, just having a bad day. But other than that, I mean, we're really talking about hundreds of stocks that we've got our eyes on, and all maintaining above that 21-day moving average. So even though a rough day yesterday, there was no follow through to the downside. That gave us some confidence that maybe it was just a one-day wonder yesterday, and that remains to be seen. But for right now, all-time highs are simply not bearish, and that's what we're seeing right now. So I showed Uber. Let's look at Lilly. Also a nice day, up 2.3%. Uber, our largest position. Lilly second. Crowd is our third, up 2.35%. Nvidia is our fourth, up 2.44%, all responding very nicely. NXT is now fifth, and AMD is sixth. AMD, after an initial sell-off, coming back very nicely, and now above the 8-day exponential moving average, still below where we trimmed some last week, which was at 177.50. So we can look to buy this back, our trimmed piece back tomorrow, possibly. There's a lot of stocks that we're looking at. But after hours, let's look at Meta here. Up 14% to 451. Plain and simple, that's all-time highs. So Zuckerberg, the comeback kid, despite being embarrassed on Capitol Hill yesterday. Amazon, up 8%, 172. And there is a huge amount of resistance in this area, the 170 to 180 area, and Amazon is just coming into it now. And this is back from 2021. Amazon clears this. It's a clear blue sky. You can see relative strength has been lagging over the last 2 years in Amazon, but a great reaction today, and that's got room to run if it wants to. And Apple, after hours, down just slightly, down 2%, hanging around this 200-day moving average. So also somewhat of a laggard on a relative basis. That's going to wrap it. As always, like to hear from you. The email is don@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. If you're interested in becoming a client, reach out to my partner, Dan Stewart, Dan@revereasset.com. Our flagship portfolio is named GROTECTION because it's designed to grow assets while the market is in an uptrend, protect them while it's in a downtrend. Seems like a common sense approach. It's how you treat every other facet of your life. When things are going bad, you do something to rectify it. In our case, we get defensive in our portfolios. When things are going well, you stick with what's going well. And in this case, it's riding the wave off the lows from November. And with that, I'll wrap up the video for the first day of February 2024. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.